In this video, traders, we'll look at when to accept that you've missed the trade. Stay tuned. Hey guys, warm welcome to you. Alright, so sometimes it's difficult to know when you can have to throw in the towel and go, you know what, that trade is completely gone, or when you can kind of adjust it a little bit. Maybe you can wait for another setup, maybe you can chase a little bit, maybe you can work a bid. You know, there's sometimes when that's possible, and there's sometimes where you go, you know what, it's just not happened. I had my small window of opportunity, it's disappeared, now the trade is done and dusted. And generally I like to put them into two categories, right? So you've got a standard market that's really kind of rotating, so you're pushing up, testing highs, testing lows, this kind of stuff, which is what we get most of the time. Sometimes it's quite compact and quite tricky, you kind of get stuff really super tight, other times it's not. Then you've got, of course, the markets that are just ripping up. Volatility expansion type trades, trend expansion type trades, momentum ignition strategies is what we use when we're trading those. Okay, so difference between the two, obviously we've talked about this many times before. However, something I want to address is, when can you accept you've missed the trade? Now, let's just skip to this one first. In this market, you have multiple opportunities to take the trade. Now, I'm going to caveat that and say, hey, obviously, if you're full ATR of the day or full ATR of the month, if you're a swing trader or whatever it may be, and it's really stretched, you've had 4 or 5 pullbacks, you've probably missed it. You don't be chasing the thing. However, if you've tried to get, let's say, buy this pullback here, for whatever reason it hasn't quite hit your limit. It happens all the time, guys. You've got a resting limit in, think you've got it, trying to work it, you're not using a market order, you just don't get filled, or maybe you use a market order and then it's a little bit early and it stops you out, or it comes back. All sorts of things can happen, and then it carries on without you. There's still an opportunity to take the trade, as in the thesis of the trade, which is buying a pullback. Assume you're not on the 4th or 5th pullback, of course, you might be able to take it on here. So you can be patient enough to go, right, I still want to get into it, I'm still looking for a pause, a pullback, etc. What's my next trade trigger to get into this trade? I want to align long, I want to stay long until this level, or I want to stay long until I get 5 pullbacks, I want to stay long until I hit this resistance. So that's your kind of filter, and then you go, right, now I want to say, okay, what's my next entry point going to be? And you could say, right, well, if there's a moving average coming up, I'm going to use that to frame the trade. If there's a pullback of X%, I'm going to use that to frame the trade. You haven't missed the trade, and you can still have decent risk reward because your stop can still be quantifiable here as opposed to having it here. So it still makes sense. The risk reward ratio is okay. You're late. Yes, it's not as powerful as it potentially was, but it's still valid and it's something that you can still go and get. However, if you look at this type of market, you've got to almost accept that you've missed the trade on this, because if you're trading for rotations, and let's say, for example, let's just look at this and go, right, let's imagine you were trying to sell this high here. Pretty standard trade. You've pushed up again, broke out, failed, and maybe you're kind of saying, okay, well, as we come down through that, I'm going to take a trade. On the short side, I'm going to look for kind of push back to that opening price. That would be your open there, wouldn't it? Your opening price, your midpoint, whatever it may be. Now, at some point, as it starts to go further and further, if you've missed this sweet spot here, maybe you've got a little window of opportunity, but when you start selling it here or start selling here, but this is examples, guys. I'm not saying definitely you shouldn't be doing this, but just kind of examples for video purposes. When you start selling it here and here, really your stop's going to be there. Really, you're kind of, you're already 30% of the way down to your target. At some point, you've got to throw in the towel and go, you know what? That trade is gone, I need another trade idea. So compare that to this, which is the trade idea is still getting long on pullbacks. I've still got opportunity, let me wait for the next setup. This is, the trade's gone, it's finished. I'm not looking to do that anymore. In fact, if it comes up a third time, I might not want it. It's okay, in this case it worked, but you get the point. Maybe my other trade thesis has got to be, okay, breakthrough lows, or maybe I'm going to buy some kind of consolidation, a VWAP or a midpoint if I'm trading for rotational side of things. So you can see the distinct difference, guys. One is you've got a level, you've got levels of price that you're happy to take the trade at. When it goes past that, that's it. Trade is done. You forget about the whole trade and you look for the next trade idea. And that may well be a long, it might well be a short, it might well be done for the day, it might well be if you break some extremes, whatever it may be. Could be a monthly chart, whatever as well. This, slightly different, you've missed it, but the trade is still valid. You're just looking for another place to take the trade and to express that theme and idea and have a sensible stop with it, because the risk reward ratio is still good, etc. So 2 things to be distinctively look out for, guys, depending on how you're trading, depending on the time frame you're trading, market you're trading, etc. But I think having that in your mind, sometimes you have to go, right, that's done, I've missed that one. draw a line under it, because psychologically sometimes we think, oh, I can still get it, I still think it's going to hit here, you know, I still think it's going to hit that mid, oh, I'll kind of try to sell it on a bit of momentum play here, and you end up like stretching your rules and scraping the barrel just purely because you want to do that. And then also it can be frustrating because you go, oh, I just missed it by a few ticks, or didn't get a fill on it, or you know, I wasn't quite right with it, I came out, I got spooked out, whatever it is, and then it goes down to hit your target. You can be a little frustrated, and it can start to put you into an emotional position where you're perhaps trading how you shouldn't be. Something to be aware of. Sometimes you've got to go, right, done and dusted, I'm not going to take a trade again. Next idea, what's my next trade idea? What's my next trade plan? What's my next level I want to get involved in? Compared to that, we could still have the trade idea, but you just have to wait a little bit longer to find another little sweet spot entry. All right, guys, if you like this kind of stuff, thumbs up, appreciate it, take care, and I'll see you in the next one. Bye-bye.